Hello and welcome back. So, before we dive fully into um, technical analysis, how to understand what we see on the chart, we need to be informed as well that we have different chart types that we can use in analyzing the market. And these chart types are the bar chart, the line chart, and the candlestick chart. So we will quickly do a run through each of them and understand the meaning, their importance, and their uses. So we have a lot of traders that uses bar charts, those that use line charts, and those that use candlestick charts. So the first one we'll be looking at is the bar chart. How does the bar chart looks like? The bar chart looks like a stick or a bar with two short handles on both sides, or you say two short knobs on both sides. On the left side, you have a knob that indicates the opening price, and on the right side, you have a knob or say an handle that indicates the closing price. So then on these bars, we have a wick at the top and a wick at the bottom. So the wick at the top indicates the highest point that the price reached during a certain time frame. And then the lower wick is the lowest price that was reached also during the same time frame or period. So let's quickly see how a bar chart looks like. So if we check this particular chart now, this USD JPY chart, we can see that we have candlestick here. We can change it. If we are using trading view, we go here, then we select bars. So if you look at the bars, we can see the bars here. These are the bars. The green bars indicate a bullish bar, while the red bars indicate a bearish bar. That is, this is like a selling momentum here. So now, if we look at this particular bullish bar, on this left side, we can see something like a knob or like an handle, this particular thing. So it indicates that, for a buy, it started, this bar opened from this particular point. Probably it came down a bit, then went up, and it closed here. That was why we said the left knob or the left handle indicates the opening price, while the right indicates the closing price. And whatever week we see, this week now, this is the week. From this opening price, the rest of this bar now indicates the week. So this week now is the point, lowest point reached, and this particular week at the top is the highest point reached. That is for a bullish candle. Now, for a bullish bar, for this bearish bar as well, the left side indicates the opening price. It means we started selling from this particular point. So it probably went up a bit to create a wick and then sold. This was the highest point it reached. Then it bought a bit to now give us another wick. So this was the closing price. So on the left hand side, we have the opening price, while on the right hand side, we have the closing price. So that is for a bar chart. So these bars, they represent movement in price. So the red, for my own color here, I'm using a green and a red. So the red indicates that it's a sell, while the green bars indicate that there was a buy. So we'll move to the next chart type, which is a line chart. A line chart also, it conveys the same price information, just like what we are seeing on a bar chart, but it is the least favorite among all the chart types. This is the least used. So you hardly see people using a line chart, and even if they do, they have a specific purpose for which they use it. So, and what is that purpose? It is easier when you use a line chart to see a bigger picture, or to easily determine the trend of the market. When you use a line chart, you don't need to now be trying to see whether this is an uptrend or a downtrend. With a line chart, you can easily determine the trend of the market. So let's look at another example indicating that. With this now, we can see that, okay, it might probably be hard for a newbie to understand, okay, this is a bearish market, then we are switching to a bullish market. But if we change this chart type now from here to a line chart, now this is a line chart, we can easily see from a line chart that this is bearish. We were bearish, we're selling from here down to this point. And then there was a change in the price action. Then we started seeing buys, bullishness. The market started moving up from this particular point. When it got to this low, we started buying. So it is easier to see the bigger picture when we use a line chart to understand the position or the point that we are in the market. Probably we are being bullish, or we are being bearish, or we need to buy, or we need to sell. So most traders actually use the line chart to see or to understand the trend, the current trend the market is in. So then they now switch to other chart type to analyze. So now moving to the third chart type, which is the candlestick chart. It is the most popular chart type, and in fact, this is the chart type we're going to be using to teach you for analysis. So it's originated in Japan, and therefore it can be also called a Japanese candlestick. So there are little stories behind that which we are not going to look at in this lesson. You can make a little research on that. So we are going to look at a candlestick chart now, and look at um, the difference, the similarities with bar charts. So, and in fact, the similarities with line charts. Every of these chart types, they indicate movement in price. They indicate buys. They indicate sells. So let's quickly look at this chart type that we're talking about now. We will now change to a candlestick. So if you look at this, we can see each candle. We must have been seeing candles in our home. So these lines now, they are wicks. Just like we had wicks with the other chart type that we looked at first, which was the bar chart. So now the green candles that we have here indicates bullish, indicates buys, while the red candles indicate sells. So the same way we explain the bar charts, the bars, that we, for a buy now, for this bullish candlestick now, from the point from this point, this was the opening of the price. This particular place, from the edge of this wick now, that was where we started buying from here. So then we closed here. This was the point whereby we had a close. Okay, I believe we are following. So, and then we had a wick. This particular wick now, from this edge, it shows that this was the lowest point that this particular market reached, this particular candlestick got to, before continuing its movement up. And the top of this particular wick now is the highest point it got to before deciding to close at this price. The same thing for a sell candle. This was the opening price. It started selling from this point. Probably it now went up a bit, then came down up until this point. This was the highest point reached while selling. Then before it now decided to close at this point. So that is just the same thing that was explained on the bar chart with bars. So they all indicate movement in price, be it buying or selling. And we can now look at uh, it in a bigger view, in an holistic view that okay, we're in an uptrend or we are in a downtrend. We'll get to a point where we are now going to use this chart type, which is the candlestick chart type, to determine whether we are buying currently or whether we are selling. That is, whether we are in an uptrend or we are in a downtrend. So everything you see here are candlesticks. This is a bullish candlestick. This is a bearish candlestick. And we have different type of candlestick here, which we already talked about, that we are going to look at some of these candlestick patterns. Then we are going to look at different chart patterns as well. So this is just a quick run through understanding the different chart types that we have. And as I said earlier, we'll basically be focusing on a candlestick chart type. So thank you for following till this point. I will be waiting for you on the next class, which is going to be a lesson that is going to take us into understanding technical analysis properly and being able to analyze. Thank you.